Yo, what's going on, everybody? It is Monday, September 18th. Hey, I started taking boxing lessons. Man, I got this boxing gym across the street from me, and it's really fun. I like it. And so now I'm waking up at 3:30 a.m. I go for a run. And then at 6 a.m., I go box. And then during the day, I go to the gym and lift weights. That's my routine every day. But the boxing is really cool. I did Brazilian Jiu-Jitsu for about a year and a half. I got a blue belt, but I like this boxing. It's pretty cool. Anyway, let's talk about the markets today. Kind of flat. Tried to rally. I sent out an email to my subscribers, MMT Trader subscribers. I said, the rally's not going to hold, and sure enough, markets came back down. Everybody's going to be focused on this Fed meeting on Wednesday. Of course they are. You know this because these are, everything is about this psychosis of monetarism. So no matter what happens, they're gonna frame everything through the lens of monetarism. They're gonna frame everything through the lens of whatever, and it doesn't matter what the only thing that would change the equation for the monetarists, I mean, not for me, but for the monetarists, would be if Powell said, okay, we're done. But I don't think he's going to say that, because if you look at oil prices, if you look at gasoline prices, I think he's still going to maintain that hawkish tone. So there's no rate hike expected on Wednesday. You know this, I've been telling you this, and that's basically because the futures markets are not predicting a rate hike. There's like a 98% probability based on where Fed fund futures are right now that the Fed is just going to hold at 5.5%. And I've told you guys a million times that the Powell Fed, they just follow the market. It's crazy. What's the point? You got a monopolist in the central bank, and they just listen to whatever the market says. That's not, in the past I've always said, can you imagine if John D. Rockefeller, the founder of Standard Oil, a monopoly in the late 19th and early 20th century, can you imagine if he went around to all his little competitors asking them, like, what price should I price my oil at? No, he crushed them. He put them out of business. So the Fed is a monopolist rate setter, but yet it just follows what Powell's Fed just follows what the market does. Anyway, there was a very interesting line item. As you know, Friday was a quarterly corporate tax drain. I've been telling you guys about that for months and months and months. And when I went to the Daily Treasury Statement today, I was a little bit shocked, because the numbers, when I, worked up the numbers on my spreadsheet, Friday was a net drain of only 4.3 billion. And I was like, how could that be? We had a quarterly tax payment. And usually that's going to be like 70, 80, 90 billion. So I went back to the Treasury Statement, and I saw a very interesting line item that I never saw before. It was a payment of about 50 billion. It was 49.9 billion to the Federal Financing Bank. I never heard of this bank before, but apparently it has existed since the 1970s, I believe. And it's a government bank that funds agencies of the government. It provides financing to agencies of the government, okay, from what I understand. And at first I'm thinking, like, what is this 50 billion transfer, and who did it go to? There was a footnote. I wasn't even aware of the footnote right away, but I had a couple of people email me and said, Mike, there's a footnote. It explains it has to do with the failure of First Republic Bank. Remember when First Republic Bank, when was that? Like, I don't know, was it back in May or something like that? I forget. First you had that Silicon Valley Bank, then you you had a couple of bank failures and everybody was getting crazy, and I said, don't worry, it's not it's not going to be a systemic thing, blah blah blah. Again, I remember this back, I forget when it was, maybe March, April, but everybody was in a total panic, freaking out over this, and I said, look, just stay calm. The fiscal flows are very strong. The market's going to be fine, and sure enough, that's exactly what happened. But this 49 billion payment, at first I was thinking, oh man, this changes the whole outlook, because when I crunched the numbers, it put the daily leading spending flows up to like 35 billion. That was, that's the highest we've seen since early July. But then as, I got that, people alerted me to that footnote on the Daily Treasury Statement. And what this looks like to me is just an intra-governmental transfer. Treasury, from what I understand, if I have this right, first of all, the whole thing has to do with the takeover or the receivership. The FDIC was the receiver of First Republic assets, and I think those assets were eventually sold to JP Morgan. Okay, JP Morgan took over those assets. So the transfer was from the Treasury to the Federal Finance Bank. Okay, so it's an intra-governmental transfer. It's like going from one pocket to the other pocket, okay, if you're the government. So that is not a flow. I don't consider that a flow that is meaningful in the sense like, it's going out to people or institutions or something like that. It's going into the economy. No, it looks to be going from one pocket of the government into another pocket of the government. So in that regard, it's not impactful. And because I was worried, or not worried, but I had to kind of rethink the scenario. If suddenly there was a 50 billion transfer right now, unexpected, which basically offset entirely the corporate tax payment, like if that 50 billion went into the economy directly, that would have been a different story. I mean, that would have offset pretty much to a large degree the corporate tax payment, and then we would be right back into a bullish scenario. But I do not think that's what it is. I believe this is an intra-governmental transfer. In fact, that's how the language kind of reads in that footnote. So given this, I think that the outlook remains the same. We're gonna see a pullback. And again, let me repeat that on Wednesday with the Fed meeting, the zombies, they're going to sell no matter what. The only way, like I said before, the only way they'll turn into buyers is if Powell comes out and says specifically, we're done. If his hawkish tone switches over to a dovish tone. And I just don't see that happening for a number of reasons. One I just mentioned is the fact that oil prices are at an 11-month high. Gasoline prices are back up again. And also, I just think that the Biden administration, they see inflation as a major impediment to the potential re-election of Joe Biden. And they believe, the White House believes, that the Fed's in control of that. And the White House believes that the way they control it, again, the monetarist view, they think the way they control it is by raising interest rates. So I think Powell has the green light from the White House to keep doing what he's doing. That doesn't mean he's going to raise rates on Wednesday, but I do not think he's going to back off on his hawkish tone. And so the zombies are going to hear that, and they're going to sell. And I saw another funny article today. I say funny, but it's always put out there in a very serious way. But for me, it's funny because it was, again, they're saying, The impact of the rates still has yet to come. We haven't felt it yet because there's a lag. And I thought that was funny because the impact of the rate hikes has been felt already now for a year and a half. That the economy is expanding. These are fiscal transfers, but the monetarists, they just want so bad that it's going to be negative and everything's going to crash down. I mean, and they're just like, they can't understand it. They can't figure out why. So they say, well, it's going to come. It hasn't come yet, but it's going to come. And I'm just sitting there thinking, it's been that. The impact has been felt now for a year and a half with the economy expanding, with low unemployment, with these transfers going to people, going to institutions. This is a major, I've been telling you guys this for the whole entire time. And if you get my report, I mean, you see these numbers every single week. I just break it down for you. You could see it. I mean, this has been huge. So to me, it's funny. I just see these articles about, no, it's going to come eventually. I mean, what can I say? This is just when you're so deep into a mythology that you become blind to, I mean, literally what's happening around you. When you become blind to literally the reality, then there's not much you can say about people like that. I mean, they're so deep into their mythology that they miss the most obvious thing. And they're going to keep doubling down and tripling down on that mythology because, they literally exist as a result of that. They live and breathe that. They know nothing else. And they can't switch off of that because it would just scare the living daylights out of them to even consider a different paradigm, even if it's the correct paradigm. I mean, it would literally fry their brains. So, I mean, how else do you look at that other than with humor? You have to. These are sick people. Very sick people. So yeah, that's it for today, folks. I do not think this transfer, which was a surprise when I saw it on the DTS, I don't think that's going to change anything. And yeah, we'll let's get through the Fed meeting on Wednesday, and we'll see what's going on. I'd like to see a much higher level of bearish sentiment. Actually, in last week's AAII weekly sentiment survey, bearish sentiment was pretty low. I was surprised. Bullish sentiment was low too, but neutrals were very high, very high. So both camps, the bulls and the bears, they went to the neutral camp. They're very confused, obviously. They don't know what's going on. I'd like to see those neutrals jump into the bearish camp. I think that would be a really good buy signal. Anyway, I'll keep you updated. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. I send out a lot of emails during the day. It's not just that weekly report, which is a very, very in-depth report, but people appreciate those emails during the day. It's guidance, it's reassurance, it's information, it's trade or investing ideas, bunch of stuff. It's explanation of what's happening, clarification, etc. All right, everybody. See you tomorrow. Bye.